You ready?
Yeah, let's do this. Hello, everybody. It's Bree Milani with Sky Insurance. We're on another episode of the Greatness Podcast, and I'm really excited to have on somebody that I've known for, I would say, since I got in the industry, 8 to 9 years, who's always been a pretty good producer. He's always got a smile on his face and has extremely amazing words of wisdom. Every time he'd stand up at the EdCar meeting, he would always tell us something inspiring, and it's actually pretty cool. So I'm really excited to have you on, Mike Miklaus with Integrity Mortgage.
Well, thank you, Bree. It's really exciting to be a part of your podcast.
Yeah, I know you had saw me posting about it, and you're like, you get on all these young people, and what about us? And I'm like, you're young, you can get on, and I'm excited to have you on because you've been in the industry for a very long time. You've seen the ebbs, the flows, you've seen it all. So I'm excited to kind of get your story and see how you got in the industry and all of that. But first, let's talk a little bit about the most important thing, which is your beautiful family, beautiful wife and kids. Tell us a little bit about your family.
Well, my wife, Cynthia, and I, it's a second marriage. We've been together for 21 years. And we just recently, 3 years ago, moved to El Dorado Hills after me having the family home in Fair Oaks for, 34 years. All the kids got raised in Fair Oaks. And I have two boys and an adopted daughter. My wife has 4 daughters. And so we've got a lot of grandkids now.
Yeah, lots of grandkids, a nice blended family. I always see your posts on Facebook, and it's cool to see. Like, I didn't know you guys have been married 21 years. That's amazing. She is absolutely amazing. I've met her a couple times. Well, more than a couple times. I've met her many times, and she's such a ray of sunshine. She's so sweet.
She truly is. She's the heart of our home, and she's a joy to be with.
Oh, so. She is. And now you guys moved to El Dorado Hills recently. A couple years ago, you had said, and you're settled in. Everything's going well there. You love it?
Well, we do love it. We're not in the Serrano area that everyone assumes in El Dorado Hills, although that's originally what we thought we were going to do. In 2004, we bought a lot in Serrano, and we were going to build a home. And
oh, wow!
And but as time moves on, dreams change. And of course, with the 2005 through 2008, the latest big dip in the roller coaster ride known as doing mortgage lending that I've been on for the last over 40 years, it was a time to reconsider whether to do that. And then when we did finally decide to move, I just didn't want to build. And so we bought a lovely production home, and it's a single level that we enjoy, and the yards are in, and the parties have started.
I was going to say, I know I saw you did your backyard, and it looks amazing, and yeah, your guys' house is absolutely stunning, and I know that was something, I remember coming in here, and you're like, we're moving to El Dorado Hills, and I think I remember saying, I thought you lived in El Dorado Hills because you were always at EdCar, which is the El Dorado County Association of Realtors, and that's really, I mean, I knew you before that, but really where I got to know you was there. So I always thought you had lived there. So it was interesting to find out you just moved there not too long ago. Yeah,
I do attend some PCAR and some SAR activities, but I've always liked the community feel of EdCar and the El Dorado Association. And because of the fact that I also have the small real estate company as a result in Grizzly Flats, and that's something we may or may not visit about, but that was just a real tragedy, and I probably helped 10 or so families every year buy homes in the Grizzly area because of my realtor relationships in that little community. And so a lot of people that were displaced are people that I certainly know and we care a lot about.
Oh, yeah. I mean, we can definitely touch on that. You know, with insurance, we talk about it almost every day. This is like our new normal. And while it's extremely devastating, it's the world we live in, and it's what we deal with on a day-to-day basis. And I do remember we did insure a few of your clients up in Grizzly Flats, and I know we had a few losses because of that. And it's just devastating. And it's so important that people understand, you know, not that we talk about this a lot on this podcast, but really how important working with a great lender that gets you connected with a good insurance company is, because we're seeing at record rates fires in California, and it's unfortunate. These, especially in towns where it's so close to home, Grizzly Flats, that's just, I mean, where I live, it's just like a 45-minute drive too. So yeah, it's definitely devastating. I know you had a lot of clients up there, and it's too bad.
And you hit on a key point, and that's one of the reasons why I like working with Sky Insurance, and for that matter, an independent insurance broker.
Right.
I think foundationally, the public is better served when they have someone who has their best interests at heart. And to me, an independent insurance broker is very similar to being an independent mortgage broker. Mm-hmm. As an independent mortgage broker, I'm approved with over a dozen lenders that I can deliver my client's loan to.
Right.
And it's my job to find them the best overall loan to meet their circumstances, but also not make the decision for them. Present them with choices
Options.
So that they can make the best choice for their family, because the debt instrument, let's put it this way. Everybody loves having a house.
Right.
But nobody wants the debt that goes with it.
Right.
So the mortgage part of buying a home is the necessary evil. And being able to make sure that the person can properly afford the home, attempting to give them choices. Nothing's worse than burying somebody in a house because they think it's their dream house. But if they can't, have dinner at a drive-up window of their choice with their kids, then that's not a great life. Right. So they have to have a good picture of their overall financial position, and we owe it to them to make sure that they understand the choices that they're making.
Well, and it's so true. So many people say, okay, how much can I afford, right? And you say you can buy a $700,000 house. But what we don't talk about is what is the payment on that $700,000 house? Because I know when we bought our first house, I don't remember the amount we were approved for, but it was far more than what we ended up purchasing, because it's like we ended up looking at the payment and we're like, we can afford that? How? Because that seems super expensive.
It does.
And it's important, talking about broker, which is what I really want to touch on here, because honestly, I don't know. I think I've had a few brokers on the podcast, but really the importance of, or why you feel like being a broker is so important. And especially in this industry we're in right now, you've had a brokerage for how many years now?
Well, Integrity is my company, and I started Integrity 23 years ago. It'll actually be 24 years next month.
That's amazing.
And so, we opened in 97. We've been in this location since the year 2000. And, Integrity started as a result of me going to a Promise Keeper men's Christian conference. And on the way home, I had an epiphany that I really wanted to do business the way I felt we should do business for our clients. And that resulted in Integrity Mortgage. And
that's amazing.
Yeah. So we're a boutique. We're never going to be the largest mortgage company in the market, but we want to make sure that every client we do work with is well served. Yeah. And so that's our philosophy, and it's been a real joy. It really has.
I remember actually when I got in the industry 8-9 years ago, there were no brokers. It was you. I could probably name maybe one other person. And now, 8-9 years later, everybody's wanting to become a broker.
Well, it was really interesting too, because what happened was you had all these funny instruments come out, and it was kind of a perfect storm. Mm-hmm. You had, the liar loans, as they're called now. I called them pick your poison loans, because you could
yes.
pick the payment you wanted, but it didn't last for very long.
Oh, yes.
And so what happened was we had bad instruments that people were encouraged to take and buy homes that they couldn't afford. Mm-hmm. And as an industry, we were complicit in that. And the other difficulty was that you had greedy banking institutions and securities banks that were willing to securitize those instruments, which is a fancy way of saying they went to the bond market and borrowed money from your retirement plan and mine and used those to buy those bad mortgages. Mm-hmm. And nobody knew they were going to be bad because there was no history on them, and there was no rating right. on them, unlike a 30-year fixed. So you had the bad instrument. Then you had the second issue. And the second issue actually occurred 30 years before the collapse in 2006, 7, 8. What you had was a thing called Roe v. Wade. And what happened as a result of Roe v. Wade is that our birth count in the United States plummeted for a period of 3 or 4 years. And so normally we have nice couples coupling and copulating and wanting to buy new homes. And so what happened was there was a period there where there was actually a reduction in the amount of people that actually would need a home. There was an absence of household formation. And then you had the third issue, which was it became so easy to sell houses. Builders got greedy and were building more than they needed to build, which they haven't done since then.
Now it's the opposite.
Now it's the opposite. Yeah.
We need more.
And so those three contributing factors all led to the most severe real estate collapse and a once-in-a-lifetime event, quite honestly. The only other two
we
times...
all hope so.
well, statistically, I can say that if, as a student of my industry, that I believe that's true. Because the only other two times we've had an actual collapse in real estate values were during the 1930s and during the agricultural drought in the Midwest in 1877 through 1879. So 3 times in our country's history, we had the kind of trauma that we had then.
Yeah.
And now we have had some corrections in the market, but we haven't had a reduction in prices. And a lot of people are talking now, you hear that word about, what's going to happen with housing next.
We're in a bubble.
We're in a bubble. And it's not a bubble because there's excess demand. I liken it to if you're racing down the freeway at 95 mile an hour, which is what the housing industry has been doing in 2021.
Really,
and then you get that curly on the back of your neck of those hairs that tell you maybe you should slow down. And so you take your foot off the accelerator. We're coasting into the end of the year with a slower rate of increase in prices. But there isn't a decrease in prices. It's just that the rate of increase is diminishing. Now, there's no crystal ball, but if we look at next year, if the Fed decides that they need to taper more quickly or actually increase short-term rates, what they're trying to do is tamper down the demand that's in the economy because consumer demand is very high now as well. And with the supply chain issues for goods, combined with the rising housing, combined with the difficulty in the auto industry to produce timely cars because of chips, who'd have thought that smart little pieces of silicon in the middle of our vehicle would prohibit that? But all those things combined need to be quieted down. And once they are quieted down, then, interest rates can correct themselves. So, there's always going to be the doomsdayers. There are two extremes in the mortgage business that I hate.
Right.
The first are the booksellers about, the sky is falling, real estate's going to collapse, sell everything now and go live in a cave.
Yeah.
Okay. That group has been successfully selling those, the economy is going to collapse in my entire adult lifetime.
Yeah, I hear it every day. Yeah.
Then the other one is those real estate individuals that are always talking interest rate and that you got to do it now because these are the lowest rates ever and we're never going to have lower rates and all that sort of nonsense. It is nonsense. It's always going to be in a situation of a relative affordability. It's always going to be a situation of what's the best for the circumstances at the time. If the theory was that if you had horrible interest rates, you couldn't have a housing industry, then we wouldn't have had housing in the 80s because interest rates were 10, 11, 12%.
Yep.
And guess what? The number of sales didn't go down.
Right.
Not materially.
It's all relative to the time.
It's all relative to the time.
Yeah.
So it's kind of funny that way.
Yeah, and I've actually, it's funny, I've never touched on this topic before, but my parents, when they first bought their first house, and I think it was like 12, 13%. You think now, oh my gosh, how? But we also have to realize they bought a house that now is probably worth $500,000, then was worth $100,000. So it's all relative to what the world is right now. And it's funny because we do have a lot of people that come on here and we talk about how interest rates are so low, they're so low. And I remember 3 years ago, maybe 2, don't quote me on that, but this guy stood up at PCAR and he said, rates will not go lower. And this was when they were 4%. Yeah. And then it's like, he didn't say it, in a way that he was like a know-it-all. He just said, there's just no way. It's already so low. Here we are. Last year, I don't even know when it was, rates were like 2.5%. And we're like, wait a minute. Like, we didn't think it could get any lower. And I think a lot of it is a scare tactic. Like, oh my gosh, the rates are going to go up. Or, oh my gosh, the prices of homes are going to go up. And it's a scare tactic. But you're right. You nailed it on the head. It's all depending on the person, on the situation. If right now is not the time for you to buy and in 3 or 4 years is, then the situation will present itself the way it's supposed to. I think it is a lot of scare tactic. People saying, right, you have to buy now, now.
Well, and you asked me about a mortgage broker. Well, when the economy collapsed, we were down to where only 3% of the industry was mortgage brokers.
Yeah, I remember that.
And running a mortgage brokerage was kind of like admitting you were a unicorn. But there are basically three avenues that someone can go to get a home loan. The first is the traditional bank. You know, that perfect world, the one we don't live in,
Right.
where if you have 20% down, which you don't need, but everybody thinks you need,
Right.
you walk into the bank to buy that fictional perfect house for $100,000, and you have $30,000 in the bank, and you tell them you have 20 for the down payment and 3 to 4 for closing costs, and everybody's happy, and you get the loan.
That never happens.
So the traditional banks all have an interest rate in their lobby, and the B of A's and the Wells Fargo's and the U.S. banks and the citizen banks of the world are all doing very well. Mm-hmm. And they also do very well because they now have call centers, and all the loans that they maintain, they tend to rework those relationships.
Mm-hmm. Makes sense.
But when it comes to the purchase market, I discovered something a long time ago. And that is that my borrowers, if they have jobs, actually make better borrowers. So the flexibility of a mortgage broker is of being available on evenings and weekends and responding to realtors when they need to be responded to, instead of having bankers' hours, is one of the reasons why the mortgage broker is a great choice for working families when they're trying to buy a home. Because the third choice is what I call the 1-800 dial a mortgage, or the internet mortgage. You
Based
know,
out of another state.
The one that I guess is going to the moon because they're named after a flying device that leaves the atmosphere.
We won't name names.
But that industry, again, is a call center industry. So you're either online or you're dealing with a call center. Banks, you're either online, you're dealing with a call center. The beauty of a mortgage broker is that the mortgage broker typically is local, is part of the community, cares about you and your family, and is approachable and available. And that's the entire reason why the industry now, literally 3 to 4 out of every 10 home loans are being done by mortgage brokers. The mortgage brokerage industry is growing very rapidly again. And there are wholesale companies that the public's probably never heard of that are actually devoting their entire business to working as a good partner for the mortgage broker. So not unlike an insurance broker that has Mercury or Ohio Casualty and choices to place their client. That's the terrific thing about how we do business is we have choices, and we try to present the client with the best ones.
And that's kind of what we tell people is like, we're not dogging on or bagging on the State Farms and the Farmers or whoever. They're great. They're great if you fit into that bubble, just like the Wells Fargos, the Chases. They serve a purpose.
Yes.
But it's for most people aren't perfect and they don't fit into that little bubble. And so having those resources that are outside that is what's so important. And the same with brokers, with insurance brokers. It's like, insurance companies, I'll always get that question. Well, what's the name of the company? I'm going to research them. And it's like, go ahead. They all have great ratings. They're great ratings. The reason you don't know them is because you're not paying billions of dollars to be in front of your face constantly on Super Bowls commercials, you know?
Yeah.
And I mean, gosh, who pays for that? Somebody has to pay for that, right? So it's very similar. And that's why I appreciate you sharing that, because a lot of times people have a misconception of a broker because of, the past, in how long ago was that? 10, 15 years ago. They weren't looked at as like a good thing, right? And now they are.
The reason they weren't looked at as a good thing, quite honestly, was because the banking industry had to throw somebody under the bus.
And here's
they
couldn't
take ownership of the problem.
Sounds about right.
I have plaques all over this place
Yes, you do. Awesome.
and I'm sure if we went and blew some dust off of one, we could find a Wells Fargo plaque where they gave us a plaque for being their top broker for any given month back when they did wholesale.
Yeah.
But they stopped wholesale on day one of the collapse and said, oh, it was the mortgage brokers and they were in collusion with the appraisers, and that's what led to this problem. And of course, that led to another issue in our industry today, which isn't as easily solvable, and that is the appraisal process, because appraisers back in 2005, 16 years ago, made $500 to do an appraisal. And today, the appraisal fee in the greater Sacramento area is still $500 to $550. But the problem is $150 if it's going to an appraisal management company,
Right.
which means the appraiser is actually making less money than they ever had. And they're having to work and do more transactions. And also the reports are more detailed than they ever used to be. And that's why right now, one of the issues with the increased demand in 2021 and time frames, it's very difficult to get appraisals done timely.
Yeah.
I
hear that from a lot of people across the board. It seems to be an issue.
But again, it's a matter of knowing your craft. And so one of the things that I'm very proud of is in our approval letters right now, we're actually telling people that we will perform on a purchase transaction in 21 days or less. And we're actually averaging 16 to 17, but I don't want to say that. And if any of my realtor partners are listening,
They will be.
You did not hear that because we don't, if you say 16 to 21,
like, Mike, we heard you
if
on
you
that
say
podcast.
16 to 21, they all want it in 16. But if we say what we intend to honor, which is 21 days or less, and that we'd rather under promise and deliver, over deliver. And part of the secret of that success is that we push very hard on the front end of the transaction. We already have the client automated approval to where we know they qualify as far as credit, income, and assets. So all we're really doing is adding the property. If I can get fees timely from the escrow company, which we have great escrow companies in our marketplace, and we have great relationships with them, then we can register that loan and have the appraisal ordered within 48 hours of them being in contract.
That's awesome.
And if we do that, then we're successful and we can deliver timely if an appraisal is required.
Which you really need in this market. I mean, we touched a little bit about 2021 being absolutely crazy. And while people say it's slowed down, we also have to remember it's December. It's seasonal slowness happens every single year. And I'm actually kicking myself because 3 weeks ago, I think I was like, why is it so slow? And now it's like crazy busy.
Well, exactly. And what's funny is that historically, I tell my existing client relationships, because we maintain relationships with our clients. We do an annual property review with them. We do an annual loan review or mortgage tune-up to just see what their situation is. And, in many cases, it's like you're in good shape.
Yeah.
There's nothing to do here.
Right.
And that's reaffirming for people. But the reality is, I always tell people between Thanksgiving and Super Bowl Sunday, if you're considering doing any type of a refinance, that's the time to call us, because historically that's when housing demand slows down. Yeah. It's a little quieter, and we have a window with soft rates to where we can probably do our best negotiating on a refinance for you. Well, guess what?
Not so much.
This December, 70% of our business right now is purchase business. Yep. We are as strong purchase today as we were in July, and that's a little crazy, but
that is.
But the market got pushed because of the absence of inventory.
Yes.
And kudos to the buyers who didn't give up, because the buyers who were committed that they're going to try and buy this year and have stayed with it, they're being rewarded in November and December. We have one client that I'm vividly thinking of that literally wrote, I want to say 9 offers before they had their first home. And my message is always the same. That wasn't your house, but we're going to find you your house,
because I promise.
You have a great realtor partner, and she's tenacious, and she's going to find it for you. And now, we're closing escrow, and they're going to be able to celebrate Christmas in their new home.
Oh, that's
because they didn't give up.
Yeah,
and that's
it's important in this market, especially because time and time again, I have people on this podcast, and one thing's for sure is that it's just crazy. It's in a good way. I mean, I tell people I'd rather it be this way than slow. In October, November for us was a little bit quiet, and my agents were twiddling their thumbs, and I'm like, I remember. In September, you were mad because there was too much business, and now you're mad because there's not enough. And it's not mad, but like we don't have enough work. We're way too busy. It's just that push and pull. You're trying to maintain like a perfect balance, which just doesn't happen. But I want to talk a little bit also about what we talked about last time I was here, which is your team. I mean, that's kind of, well, not new to you, but you're bringing on more people. You've grown a team now, which
Yeah,
is
it is.
pretty cool.
It is actually new.
Yeah, newer, I should say.
It's not new to the industry. The real estate industry has been moving toward teams for some time, and
Right.
of course, the probably the lead idea maker when it came to teams was Gary Keller and the Keller Williams model. But whether it's teams big or small, real estate agents are now migrating into teamwork and engaging in teams where there's a visual agent out front who's highly successful, highly regarded, been around a long time. You know, I can think of so many examples of that.
Yeah.
And then, but in the lending business, the lenders all tended to be sole operators, and there was very little team building.
Yeah, that's
And
very true.
so
actually.
I have several agents that work with me, including a couple of amazing agents that are two of the best in the industry in Delia Fling and David Banks. But I made the decision consciously to refocus on my business the last couple, 3 years. And as you know, I have other interests, and I've slowly sold some of those other interests off, and I divested of those so that I can refocus on this business that I'm passionate about. And I decided to model my a lending team similar to a real estate team. And so Cynthia Mansfield joined me and is an associate loan officer, and she's doing terrific. We've added an additional processor admin person, and Allison, who works with my other processor, Nicole. And I'm just talking about my personal team. I mean, I'm not talking about the entire corporate umbrella. And we have another person that's going to be joining us in January.
Ooh.
And we've already projected and have another person joining us in July.
Oh, wow.
My son-in-law is retiring
Cool.
from 22 years in the Coast Guard and is studying for his California real estate exam right now as we speak.
No pressure.
In beautiful Norfolk, Virginia,
Wow.
where he's stationed presently. But he and our daughter Kristen and the grandbabies are coming back to
Yay.
NorCal, and hopefully we'll find him a nice little home in Cameron Park or El Dorado Hills, and he's going to join the company.
Get some
and
new people in here.
Step in behind Cynthia and Michelle and learn the ropes, because what it's allowing me to do is spend more time working with the clients initially, and then putting them with very capable people that love doing this business almost as much as I do.
Almost.
And I always used, I still get guilty of it. Sometimes they'll take things away from me. They'll go, "We can do this for you," and I'm in the back of my head, I still have, like many people do, that, hey, I do this probably better than anybody else.
Yeah.
And what I've figured out is that if you got two really good people that can do it, that other person ought to be doing some of it too. And if you let them do it, some amazing things happen.
Your life gets a little easier. That's for one thing.
Well, but it also frees you up to handle some of the other clients maybe that you didn't take the time for because you were, quote, too busy.
Yeah.
And so I think our client quality of experience is actually increasing as I've built my team and my staff. They're not getting all Mike Miklaus all the time, which is probably a good thing, but instead they're getting the Miklaus Integrity Team, which are some very capable people that it's exciting to watch them have as much enjoyment as seeing a couple get the keys as I do.
Yeah.
You know, they're doing it the way I do it, which is we go to our signings. We're there to see the clients sign their papers and get their keys, and there's great joy in that.
Yeah, and it's cool to be able to pass some of that down, and that way you can service your clients better. There's nothing better. I'm with you. We have a full team behind us as well, and I couldn't do my job as good as I do without them, because you'd be doing multiple people's jobs. We're going to hop onto a really quick break, and we're going to come back. I want to talk a little bit about the things you like to do in your off time, and then kind of talk about what you anticipate is going to happen in the market in the next year or two. So we'll be right back.
Very good.
All right, we're back, and I'm excited to talk a little bit about how well, you and I had already met, and then fast forward to a couple years, and I've come to find out my husband, he was a basketball referee. And we just were talking. He's like, yeah, there's this guy, Mike, and he assigned some of our games. And I didn't know who he was talking about. And sure enough, it was you. I'm like, wait, what? Like, wow, how two worlds collide. Like, that's amazing. Yeah. So I know you didn't do basketball refereeing, but you were an ump, or you are an ump for quite some time. And from what I understand, you can beat out most of the people like half your age on that field. So tell us a little bit about that. I know you kind of took a little break from it, but you're back, and, it's exciting. It's really cool to hear that you do that.
Well, everybody took a break from it during COVID.
True. I guess you took an
we took an unscheduled break.
Yeah.
But no, I started umpiring many, many years ago when my kids were in Little League. All the dads wanted to be coaches so their kid could be all-stars, but none of the dads wanted to umpire the game so the kids could play.
Fair enough.
And if you don't have an umpire, it's not a game, it's a scrimmage. And so I started umpiring Little League, and that led to umpiring Babe Ruth, and that led to umpiring high school baseball. And when I got into high school baseball, the California Interscholastic Federation requires 18 hours of continuing education in your craft because officiating is a vocation, whether it's basketball, football, baseball, whatever. Mm-hmm. And so I got involved in the training of umpires, and that led to getting into junior college umpiring, and that led to doing four-year college baseball, which I was very privileged to do for several years. And in 2013, I even got a contract from the Pacific Coast League, and I umpired 6 River Cats games.
Oh, how cool.
So I officially had my cup of coffee in the minor league baseball. I am a professional umpire.
Yes.
Or at least was.
I feel like you still kind of are.
but I do love doing my sport, which is baseball, and I'll be doing junior college and high school baseball again this spring.
That's amazing.
But I also, because of the training side, decided to get involved at a higher level. And so the Sac Joaquin section, which covers Napa to Nevada City and Yuba City to Galt, has around 1,000 officials on average over the last 20 years. Mm-hmm. And if you move the Officials Association to the Midwest, we'd be in the top 20 states in terms of the size of our organization. And a dozen years ago, they elected me president of the executive board. So I'm still the president of the Northern California Officials Association.
I didn't know if you were still. Okay.
But I also was involved in assigning activities and actually scheduling games for others, and that was a side business, a side hustle, as you kids call it. And so I've been divesting myself of my side hustles. So I no longer assign high school athletics. I no longer assign youth athletics. And I had capable people that I brought into those businesses, and they elected to purchase them for me.
I mean, it's like what we were talking about with previously, talking about building a team, getting some of those things off your plate. I know when we had children, I told my husband, it's time to hang up the hat. I know you love doing it, but he got burnt out too. But it just took away from our family so much that I was like, we have young kids. Like, it's too hard for you to be gone on the weekdays. Like, couldn't do it anymore. So he still, loves the sport more than anything, but he hung his hat up. He was like, I'm done.
But he'll be back.
He'll be back. Well, maybe when our kids are playing basketball and stuff.
Here's what happens. Truthfully, you know what the average age of our new high school officials is? It's about 57 years old.
Retired.
Because what happens is the kids go through high school, and the reason officiating is so important is that's the highest level of athletics that most kids ever see.
Right.
And we're not there for ourselves. We're there to give them a great experience and wonderful memories. And so what happens is Nick will be on the sidelines, and he'll be chewing on a towel, trying to keep from yelling while your kids are going through their high school games.
That's so
and
true.
As soon as they graduate and move on into college, about that point, he'll say, we don't have our kids' games to go anymore. Do you mind if I go work a game or two a week? And he'll come back on the basketball court.
I wouldn't be surprised. He's still, we watch basketball every single day. We go to Kings games constantly. So the sport still lives in his veins for sure. It always will. So We'll see. I told him, I said, you're going to be coaching the kids soon, because our daughter's 4. We put her in a little hot shots league, and she
I saw some
hated
pictures
it.
of that.
It was awful. Like, never again. We'll probably wait a couple years. She just, every time we'd go, she'd be like, Mom, I don't want to go. And I'm like, I know, but I'm not going to let my kid be a quitter. I made her go to every practice, every game. She had fun when she was there. I think she was the only girl, and she was the tiniest one on the court. And, most of the kids were 5 and 6 year olds, and she was 4, and she felt out of place. So I'm like, you know what? We'll wait a couple years and we'll visit that again.
There you go.
But we had fun. Nick and his brother coached, and it was a good time. But you're probably right. Nick will be on the court. But
here's a little counsel on youth athletics.
No.
Okay?
Oh gosh, yes.
Let them try every sport they show an interest in,
Yes.
but just understand that the first year is what I call, oh my God. And
Yes.
then the second year is, oh, I love this. So
Okay.
the first, 9, 10 kids 9 and 10 swim together. When they're 9, they never win. When they're 10, they're the queen of the pool.
Yeah.
And
true.
and the same in Little League, 9, 10s play together. And so when you're 9,
That's
you're
it.
picking daisies in right field, and when you're 10, you're on the pitcher's mound.
Yep.
And it's the nature of the ebb and flow of youth sports that it's always that second year that they have fun
Does
for
better.
some reason.
I told her, I said, we'll do another sport, whatever it may be. So she wants to do gymnastics, which I'm all for. I was a gymnast and cheerleader my whole life. So I was like, that's fine. We'll do gymnastics this year. We've done soccer. She loves soccer. So we'll definitely continue soccer. But I think basketball, we're just going to hang up the hat for a little bit on that one. Kills Nick's spirit a little bit. But I'm like, you know what, Nick? Our son is almost 2 and he loves everything basketball. Like, the kid loves it. So I'm like, you'll have that with him. Kennedy's just not into basketball, and that's okay.
It is okay. Yeah.
But on another note, we're going to wrap it up a little bit, but I did want to talk about, I know in the beginning we talked a little bit about, what has been going on in this industry, like the craziness, but with the craziness, we kind of have to predict what's going to happen in the next 6 months to a year. There's so many different people saying so many different things. And I know this last year that I've had this podcast, it's all pretty much been, when I asked that question, it's been the same answer. So I'm curious to hear, what do you feel like it's going to, if you had a magic 8 ball and you could look into the future?
No pressure. Now,
No pressure.
Now here I am, and I'm going to give a different answer. But the reality is interest rates go up and down.
Uh-huh.
Okay, so there's no magic in predicting that. But what you do is you look for indicators, and all indicators are, and you can see on the screens, I have them that I follow.
Yep.
All indications right now are that interest rates are going to start drifting a little higher because the Fed, as we talked earlier, has to tampen down the economy a little bit, has to tampen down demand. And they'll do that first with tapering, then they may do that with raising the only tool they have, which is short rates. Mm-hmm. There's a thing called compression in interest rates. And without getting detailed and teaching a seminar instead of having your delightful podcast, let's just say interest rates, short and long, go up and down kind of like an accordion. Mm-hmm. And so when rates are tending to be appearing like they're going up, then long rates tend to go up a little quicker because of the fear that you might lock into a long-term debt instrument if you're a bank that you'll have to hang on to for too long.
Right.
But once you peak and you can see that the demand's going to subside, then the compression comes back and the rates come more into a line again. Mm-hmm. Right now, the 10-year Treasury and the 30-year mortgage bond are out of sync. Mm-hmm. And one of them's in an overbought or oversold position, which simply says rates are going to drift upward as we go into spring, possibly even summer of 2022. But I honestly think that the correction will be fairly swift, especially if political statement or government gets out of the way of itself and allows private industry to unload those ships and get some of the backlog, get the toys here for next Christmas because they're not making it for this one. Yeah. You want to here's the flash. A lot of people are going to be disappointed this year if they're looking for something under the tree that's out on one of those ships.
Yes.
Everybody knows that. But the reality is it'll correct itself. Mm-hmm. And when it does, then that'll take the pressure off of rates. And slowing the buying cycle down a little bit would be good. Yeah. An increase in building would also be good. Your major builders all have sent a clear message what they think is going to happen, because whether it's Toll Brothers or Lennar or any of the major builders, they're all buying land.
Yeah.
And they wouldn't be buying land for production lots if they thought they were going to be holding that land for an inordinate amount of time.
It's definitely reassuring when you hear that stuff like
Yeah.
that. His family does stucco and drywalls, and he does accounting for them. And that's one thing they're talking about is their guy that does that stuff. He's saying, they bought all this land. They're still wanting to build. It's just a matter of now where's everything at to build?
Yeah.
I think he was saying like they have stuff that they can't do the drywall and stucco on because there's no roof. So they don't want to ruin it. So it's a matter of, you're right, like things just kind of working themselves out, and then hopefully we can go on as business as usual. Fingers crossed, right?
Well, it's the one thing about business as usual, and is that there's nothing usual about it. Okay,
that's true.
The only constant in this life is change, and
Amen to that.
the human nature is that we fight change. We fight the very essence of growth. I posted an ism. My staff affectionately calls them Mickisms around here, and what I asked last week was, what have you failed at this week? And if you can't think of something, then you're just not trying hard enough.
Yeah, I can tell you a lot of things I feel.
because failure is not the opposite of success. Failure is one of those things where you went off and you heard the bumps on the side of the freeway that told you that you need to make a correction.
Right.
And so you're headed in the right direction, but you got to watch those guardrails once in a while. And if you're not pushing yourself, you're not growing. Yeah. And we tend to, as human beings, like to come back within comfort, when in fact the true human condition is that in order to be the best version of ourselves we can be, we need to focus on being at growing.
Yeah.
So you need to be a mentor and a mentee every day.
Yep.
You're either green and growing or you're ripe and rotten. There's another ism.
Oh, I like
but,
it. I was going to actually ask you, like, hey, finish this off with. Because he always, I swear, if you go to Ed Carr, you've heard Mike stand up, and he always has something good to say. And it kind of makes you ponder, like, oh, yeah, that's so true. Like, we don't stop and think about that very often. I love it.
I start every morning with motivational reading and inspirational reading and looking for thoughts that take something that I'm probably already thinking and just turn it and tilt it a little bit.
A little bit, and a little more positive.
Because positivity is the foundation of a good life.
Yes.
Regrets are or reflection, excess reflection on the past is an indication that you're not prepared to move forward. And you have to have a positive mindset because life's going to move forward.
Yeah.
Okay.
Every day will move on. That's for sure.
So take some positive reflection and get some exercise in. And then when you take that shower in the morning, check your heel. If you don't have an expiration date on it, then get dressed and go to work.
I love it. That's awesome. Well, you were absolutely amazing. On our break, I said, Mike, have you done this before? Because you're just like so seamless. I love it. So why don't you, anybody who's listening, maybe who you don't work with, who doesn't know who you are, what's the best way to get a hold of you? I know you have your email or a website, but what's the best way for somebody to get a hold of you?
Well, of course, the office number here is 916-987-0899. Then there's my electronic leash, which still works, both phone and text, 916-712-4148. But you can also reach us through email. Mine is mmiklaus@myintegritymortgage.com. And you can just go to the website, myintegritymortgage.com.
Yes, I went on it.
It is myintegritymortgage.com.
I love it. Well, thanks for coming on. You were wonderful. And thank you to everybody who's listening. And yes, thanks again.
Well, thank you and the members of the Sky Insurance team for having me.
Oh, yes. Thanks.